How are you going to fund your investment properties? Here are 10 ways to get potential funding for an investment property. Number one, traditional banking financing. One of the most common ways to finance investment properties is to just secure a mortgage from a bank or a financial institution. This typically involves a down payment and a set interest rate over a fixed period of time. Number two, how about private lenders? Private lenders are individuals or groups who lend money to investors in exchange for a higher return on investment. These lenders may be friends or family members, or they may be professional investors who specialize in lending money to real estate investors. Number three, hard money loans. A hard money lender is typically a private company that specializes in short-term loans to real estate investors. These loans are often used to fund fix and flip projects or other quick turnaround investments. They will typically invest based solely on the property. Number four, a seller financing situation. Some sellers may be willing to offer financing to buyers of their properties, which can be useful ways to source funding without having to go through a traditional lender. Number five, real estate crowdfunding. Real estate crowdfunding platforms allow investors to pool their money together to invest in a large property or project. This can be a good way to diversify your investment and access opportunities that might not be available otherwise. Number six, house equity line of credit, or called a HELOC. If you already own a home, you may be able to tap into the equity to fund new investment properties. A HELOC allows you to borrow against the equity in your home using your property as collateral. If you live in Colorado, in the past several years, all the property values have risen significantly. So if you've owned your home for a few years, you most likely have a ton of equity that you could tap into to get a loan on. Number seven, retirement accounts or infinite banking. Some retirement accounts, such as self-directed IRAs, allow investors to use their funds to invest in real estate. This can be a good way to access funding while also diversifying your retirement portfolio. You should also look into infinite banking. These are universal life policies that you can borrow against with no penalty. Number eight is a partnership. Partnering with other investors or real estate professionals can be a useful way to pool resources and access funding. This can also be a good way to tap into expertise and experience that you may not have on your own. Number nine, government programs. Depending on your location and the type of investment you're pursuing, there may be government programs available to help fund your project. For example, some cities offer tax incentives or low interest loans to encourage investments in certain areas. And number 10, how about good old-fashioned personal savings? If you have personal savings that you're willing to invest, this can be a good way to fund your investment property. This may involve using cash or liquidating your assets, such as stocks or bonds, to free up funds for your real estate investing. But if it's your cash, you can usually get a really good deal with cash. These are just some of the ways that you can invest in real estate that you should take advantage of and not hold back from potentially investing in real estate and a great investment for your future.